Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for the week ending Friday, June 21st, 2019. Now, I'm recording this today on Sunday, June 23rd, because I was traveling, so I couldn't record it earlier. So we'll do our best, basically. So we'll look at again at the same thing. Stocks are breaking to fresh record highs. This is obviously a bullish behavior. The stock market is trending higher. We have several new highs in various major indices as well as sectors. Junk that is still confirming the move higher. Yield curve becomes less of a concern. I think I'll kind of delve into that. While gold actually hits a fresh 5-year high, and gold miners are right behind, so I'm actually holding a position in GDX, and the alert was sent for XAU USD for gold. And we'll look at the dollar, and I think we have many more signs now pointing to the reversal in the dollar, the Japanese yen and the Swiss franc specifically. And we'll finally finish off with a crypto review, and some of the positions are actually up 100%, which is sweet. Alright, so S&P 500. So first of all, on this chart we have four lines. We have the green, the blue, the red, and a yellow line. These lines are programmed in. These are custom designed indicators. You can have them on your charts. You notice here this is the name of the indicator, MasterCharts Trading. You can find out more by going to MasterChartsTrading.com, or you can also find me on TradingView, because these indicators are available for TradingView. So I'm at MasterCharts. So let's get right to the price action. So the price action needs to be taken in the context of primary trend. If a primary trend is up, then pretty much we will need to ignore all bearish setups. In other words, we're going to ignore opportunities to sell short. We are only going to be looking for opportunities to be buying. So in other words, if S&P 500 is in an uptrend, how do I know if it's in an uptrend? I know it's in an uptrend because the price has closed above the blue right there, blue line, on February 1st of this year, and this is all the information I need. Basically at that point I'm buying, and actually this is an alert as well. So this is the initial kind of way to open, and then anytime we see a pullback, and let me demonstrate it on a, for example, QQQ. So we have an initial breakout right there on 5th of February, where I'm hovering. Alert was sent a few weeks later, 13th of February, and another opportunity right there on the 8th of March, before fresh record highs were made. Now, a relatively deep pullback. Notice where the pullback stopped, exactly at the blue line. So these indicator lines, they catch the price action quite well, and as a result we can simply use the lines to make trading decisions. So in this case, all I'm waiting for is a pullback towards the blue line and then a close above it. So there it is right there on the 4th of June. Alert was sent to my subscribers at MasterChartsTrading.com, and a new move higher unfolded. We're almost at a fresh record high. In fact, Dow Jones made a new record high. The price has never been up here in the past. Dow Jones Industrial Average, we can see Dow Jones Industrial Average, the high was 26,907. So previous high was, let me see, 26,695. So we're definitely breaking to fresh record highs. Record highs are always bullish, always positive for the security, be that stock market, be that bond market, be that gold, oil, any commodity that you're trading. New record highs and new highs are always bullish. Okay, so we got SPY, QQQ, Dow Jones, QQQ, Nasdaq all moving to fresh highs. Record high again on utilities. This is a defensive sector, but I still think that the only thing that we should worry about is the fact that these are stocks. These are not bonds. These are indeed utility stocks. And there was an alert right there on the 23rd of January. And then we just went to fresh record highs and non-stop. It just keeps going. It's a little bit overextended, sure. I think a pullback is very reasonable. Where would it go to? Well, ideally it should go to the blue line, but it could go deeper actually. I think it might go like to around 55. I think the really good support is right there at 55 bucks for utilities. XLY, consumer discretionary, again, this is the most economically sensitive sector out there. In other words, it contains companies that are dependent on strong, robust economy. And obviously, the United States economy is extremely robust right now because this is a fresh record high. And fresh record highs show that investors are very much interested in risk-on trades. In other words, the investors think that even though these are record highs, we will go even higher. Now, me personally, again, I like to see a pullback before I initiate new positions, and here is one right there on the 4th of June. I sent an alert, just as I always do. Basically, we had a touch of the blue line and a close above it, and then we have a nice 7.68% gain already. I think this will continue higher, possibly following a pause. Okay, so let me, before I get into gold, let me look at junk bonds and the various bonds. So junk bonds and stocks move together in lockstep. So here's S&P 500, and here is junk bonds, JNK. High yield bonds. You can see that the shape of the curve is extremely similar, and that means that they have high correlation. If stocks and other stocks, generally speaking, have very high correlation, and additionally, stocks and junk bonds, the high yield bonds, also have very high correlation. And if the correlation sometimes is opposite or it's not going in a lockstep, then we can say certain things about the behavior of stocks and bonds. But in this case, we have no divergences. This is just pure and simple bullish chart because this is a record, well, a high for the move, and I think it's a 52-week high as well. So right this instant, I'm seeing just basically bullish market throughout for junk bonds and for stocks. Now, additionally, I'm seeing a bullish market for investment grade bonds and treasuries. So you can see TLT, the 20 plus year treasury bonds, so this is the safest of the safest, made a new high right there on 20th of June. I have still a position myself. I opened here in January. I sold 3/4 of the position, so I have a quarter remaining. Perhaps this is it. This looks sure like a tapping pattern. Maybe this is a shooting star and a follow through to the downside. We'll see. At this point, we'll just watch it because, I mean, the gains are excellent. This is another alert for my subscribers. Just beautiful move higher. Intermediate term bonds doing the same thing. You can see an alert right there in December of last year with an enormous move higher. If you know, bonds do not move that much, so this is a major move for bonds. And of course, BSV, also known as short-term bond fund, also an enormous move. I sent an alert here on December 31st, and then we got just a huge move higher. Now, let me look at the yield curve because, you know, record highs for bonds would mean lows for the yield. So here's the yield curve. Now this yield curve I'm showing right now where I'm hovering, it's 15th of April. So you can see that the short-term yield was above 2.32% right there. Now we're going to advance forward, and you can see that the short-term yield is also coming down, and there it is coming down below 2.32%. So it's not great situation when you have yield coming down and short-term yields are still higher than some of the longer-term ones, but the situation is not as bad as you can see a few weeks ago. For example, right there, where we have a much more severe yield curve inversion. Right now, it's not as bad because you can see that the yield curve inversion kind of eased off a little bit. So we can see that at maybe 10-year yield is the same as the 3 months yield, whereas before it extended sometimes to even 20 years right there, for example. So I think it's coming down, and that's a good sign because again I kept showing the same charts before. So for example, let me see, where is it? Like right there in March 2007, you can see a yield curve inversion and then eventually a collapse of the stock market. The same thing more or less happened back in May of 2000, where the short-term yields were actually higher than the longer-term yields. Right this instant, this is, I think maybe the Federal Reserve has learned its lesson, and now they're aggressively trying to keep the short-term yields below the longer ones. Despite the fact that there was no interference from the Federal Reserve this time, the yields just kind of came down. So this is a market kind of driven yields, and this is a good thing. So let's see if it will come down even further, and then we don't have this inverted look anymore. But for now we'll basically just look at this chart as it is and continue looking for buying opportunities. Now again, I think that this is a bit overextended, so a move back should I think unfold. Some sort of a pullback should unfold. We'll see where it takes us and whether or not this will be a reversal or it will be a opportunity to buy. All right, let's move on to various commodities. This time around I will not cover oil, will not cover natural gas. In fact, there's not much going on with natural gas. It's just a fresh low. Well, here I covered it. That was because there's just not much going on with gas. Oil, I have a trade that we may be opening pretty soon, so I don't want to give it away. If you're a subscriber, then of course you will get the alert. Now here is gold, paper gold, XAU USD. We can also do GC1 exclamation point, which is a futures. So let's look at XAU USD. Now this is you can see the several up arrows. These are actual alerts. So if you were trading, for example, GLD, and these are also actual alerts. So here's GLD, and latest alert just was sweet, 8.82% gain. I have still a position in GDX. I myself opened right there on 31st of May. A few days later I sold a quarter, and the only reason why I did it is just to feel better. And I would recommend to other investors and traders to do something of similar nature, because you want to feel good from your trading, and taking profits is probably as good as it gets. So I took some profits, and next day it just popped higher. So right this instant I'm not going to take any more profits. So maybe I'll take a little bit, but I'm simply advancing my stop. So my stop is well above the entry. moved my stop to like 22.60, maybe even $23, and see where it goes. It could just continue higher. We might see a little bit of a pullback, but overall this is a bullish chart, and I would continue buying it. Now the reason why I think gold has gained, or rather the reason why I think gold will continue, is that I have a more and more suspicion that the dollar index is finally turning around to the downside. So here's DXY, dollar index. So if you listen to my previous videos, I kept pointing out the trading range. You can see the green to yellow line was about 6% here, but right this instant the green to yellow line is much narrower. It's only 3%, so literally it was cut in half. So the trading range is right now cut in half. What this means is when trading range narrows, sometimes quite often a change of trend takes place, and you can see that up to and including very recently, it was an obvious uptrend, which is, those are fresh highs, and there's the breakout right there on 25th of May. From there on, we just simply keep buying. If you can trade this elsewhere, not in the United States, you can trade it, this index. So notice that on Friday we had a significant amount of selling, and this candlestick is actually quite bearish as well. You can see that on Friday right there, the candlestick, the close and the low of the day are the same. So this shows that the price pressure to the downside was evident until the very end of the day. So all I'm looking for is basically a breakdown below the red line. Currently the red line is 95.46, so very close. And if that happens, I think the dollar index would have turned around. In other words, it will continue depreciating now. Some of the evidence that I'm seeing for the dollar turning around, dollar index turning around, is the fact that several individual currencies are also gaining. And in fact, here's USD JPY. I opened the position here myself at 108.598, and then it kind of meandered a little bit. But if you know how to read the like price patterns, you can see that this is sort of like a let me see, I'm just going to get rid of this arrow. Anyways, it's okay. So this is sort of like a rising wedge right there. So a rising wedge. So rising wedges, generally speaking, are bearish. I don't trade off of them. However, I don't trade off chart patterns at all. I only use my indicators, and I'm looking at price. If the price is doing a certain thing, then I'm buying or selling them. In this case, there was a breakdown of the price below what I call bearish levels. And this sideways trading that kind of looked a little bit like a rising wedge, now with the breakdown, is, we need to take it in context of a bearish security. If it was, for example, a bullish security, if it was here back in February, then this rising, let's for example say that this is a rising wedge, then I don't really care about this rising wedge because it's already bullish, and I don't really care about bearish setups. But if you like to trade off of chart patterns, this was a rising wedge in my opinion, and now we have a breakdown. So overall, I think it's just set to continue lower, this particular security. Here's the Japanese yen futures looking even more beautiful, very elegant. You can see that I'm not drawing this. The lines are drawn in real time. So you can see that right there. like 8th of May, 9th of May. I'm going to advance forward. You can see a touch of the blue indicator line right there. So price action favors these indicators. And if you can read price action, that's all you need to do. You can make a lot of money by simply reading price action. So pullback, and there's the breakout right there on the 31st of May, and then we just buy. We have several opportunities to buy in this area. Another touch of the blue line right there, beautiful, 11th of January, and this looks like a hammer candlestick. Hammer candlestick in a bullish security is a good sign. You want to be buying it. And there's the break higher. Another reason I think we are seeing a turnaround in the dollar is because of Swiss franc. So this, I'm looking here at Swiss franc futures on TradingView. It's S61 exclamation point. There's the breakout actually on Friday, 21st of June, sorry, and now I think it will continue higher. I think Swiss franc will appreciate now versus the dollar and other currencies. Finally, let's look at some of the cryptos and the latest trades for cryptos. So here is one with a very nice 100% move in our favor. Alert was sent, actually several alerts. First, there was a breakout right there on the 2nd of April, meandering, pull back towards blue line, beautiful touch of the blue line right there. I'm not making this up. These are mathematically calculated indicators. So notice how nicely it is. It just comes right to the blue line, several touches right there, and then a move higher. And a 100% move in our favor for Litecoin. My position in Bitcoin, it is 102% in profit. Even though I took profits, I took half, sold half here. I still have the second half of my position, which is up 100%. So just sometimes you wonder about this security and how they move. But overall, nothing is different from trading Bitcoin versus trading shares of Apple or IBM. Same thing, we just simply look for a breakout, a close above the blue line right there on 6th, 7th, 8th of May, and then it just took off. That's all. So last time, some people on StockTweets pointed out that I couldn't spell Ethereum. Thank you for pointing it out. It's actually spelled with an E, not an I. I apologize for misspelling Ethereum. It doesn't matter what it's spelled like. The only thing that matters is there a close above the blue line? Is there a breakout? Yes, there was a breakout right there on 13th of May. Alert was sent to my subscribers at MasterCharts Trading. You got 63% gain. It seems to want to go higher. Nowadays, you can trade Ethereum, Bitcoin, Litecoin on Robinhood and pay no transaction fees. Just remember that. Okay, so as I mentioned, check out, go to TradingView, then look for me there at MasterCharts, at MasterCharts. You can, so for example, you can see people where I'm hovering, and then type in MasterCharts right there. So the indicators, you can have them on your charts. These indicators that I'm showing, these lines here that I'm using, basically open and close positions. And if you do the same, you can make good money. I mean, it just sometimes goes in your favor really nicely. Like for example, the one with the Bitcoin. Yeah, this is a a nice gain right there, and I think it's set to continue. It looks like a parabolic advance, so eventually there will be a hangover, so we'll need to take some profits. But for now, let's just keep it open, see what happens. The other way to reach me is to go to Master Charts Trading, right there, click on sign up. I mean, you can read the blog and all that and get some ideas, but of course, if you're serious about trading, then you should get your own trading indicators, or at the very least you should get the alerts that I'm sending. Now, all of my plans have free 30-day trial, so you have plenty of time to evaluate. I send alerts about lots of various ETFs, lots of stocks, small cap, large cap, gold. Risk control is also built in right into the alerts. So I'm sending alert. I'm gonna show you where I would put my stop and how many shares I would be buying. So overall, you will want to pick and choose what you like to, how you like to trade. So alerts is the easiest way to trade because you don't really need to think. You just simply buy or sell. The alerts I send as an email at the end of the day. You have plenty of opportunities to buy the stocks that are mentioned in the email, because usually we have several days. Like for example here, let's say that we're trading, I don't know, Bitcoin, or let's see what we could show. Here's for example Russia, RSX. We have opportunities, like for example, we can see right there on 9th of May, 10th of May, and 13th of May, there was several opportunities to buy around the same price. So this is what I'm talking about. Yeah, you will have an alert at the end of the day, so you will have the same day opportunity to buy, but also even sometimes you have several more days to buy and make a decision. Now, if you're a serious trader, you should get my trading indicators, and I can set it up with you, in 5 minutes basically. It's super easy. I have lots of experience, and I have lots of library of training videos, so you can check them out. You can actually get them for free. The videos you can get for free if you sign. If you click on members and then click on sign up, then you can register. You can actually get it for free. It's a little tip for you. And of course, for the real serious trader, and this is all I do, I have both the indicators, obviously, because I invented them, and the alerts, because I'm sending them. So I have, I would recommend you getting both the alerts and the indicators. Now, it is currently, I think, a very reasonable price of $45.95, and you can see that this is significantly less than if you would be paying for them separately. And of course, there is always a yearly option, so you can sign up there. Okay, as usual, please hit the like button for this video, subscribe to this channel. If you're not yet ready to sign up, find me on social places. There's my TradingView account and the links to it. If you click on help, you can find social links: Facebook, Twitter, YouTube, and StockTwits. Again, thank you for listening, and have another great trading week. Bye-bye.